Hello, and welcome to today's video where we'll be discussing stop-loss orders in trading. If you're new to trading or just want to learn more about how to manage your risk, then this video is for you. In this video, we'll cover what stop-loss orders are, how to use them, and some tips for maximizing their effectiveness. So, what exactly is a stop-loss order? A stop-loss order is an order placed with your broker to sell a security when it reaches a certain price. The purpose of a stop-loss order is to limit your losses if the price of the security drops below a certain level. Let's say you bought a stock at $50 per share, but you're worried that the price might drop. You can place a stop-loss order at $45 per share, which means that if the price drops to $45 or below, your broker will automatically sell your shares, limiting your losses. Now that we know what a stop-loss order is, let's talk about how to use them effectively. First, it's important to set your stop-loss order at a level that makes sense for your trading strategy. This could be based on technical analysis, such as support and resistance levels, or fundamental analysis, such as the company's financials or news events. Another important factor to consider is the volatility of the security you're trading. If you're trading a highly volatile stock, you may need to set your stop-loss order at a wider margin to account for fluctuations in price. On the other hand, if you're trading a more stable stock, you may be able to set a tighter stop-loss order. It's also important to regularly review and adjust your stop-loss orders as needed. As the price of the security changes, you may need to adjust your stop-loss order to ensure that it remains effective in limiting your losses. Now, let's talk about some tips for maximizing the effectiveness of your stop-loss orders. First, avoid setting your stop-loss orders too close to the current price. This can result in your shares being sold prematurely, and you may miss out on potential gains. Second, avoid setting your stop-loss orders too far away from the current price. This can result in larger losses if the price suddenly drops below your stop-loss order. Finally, it's important to stay disciplined and stick to your trading plan. Don't let emotions or fear drive your decision-making when it comes to stop-loss orders. Stick to your strategy and trust in the effectiveness of your stop-loss orders to limit your losses and protect your investments. In conclusion, stop-loss orders are an important tool for managing risk in trading. By setting your stop-loss orders effectively and regularly reviewing and adjusting them, you can limit your losses and maximize your gains. Remember to stay disciplined and stick to your trading plan, and you'll be well on your way to success in trading. Thanks for watching, and don't forget to like, comment, and subscribe for more informative videos on trading and investing.